So I told Fahmy, don't worry about his charts. He won't get a word in because JC's got 70.
That's what I did.
This motherfucker just walked
So
in here
Joe
with his
brought
homework.
Actual notes.
Wait,
What
can
is
I
this?
see- Could I?
Amazing.
Physical notes?
What is this? We got this
It's on
seltzer?
loose. It's on loose
This
leaf
is gross.
paper.
And seltzer?
Yeah.
Remember the old days
I
we used to
got
drink
this.
tequila?
It's
What happened to that?
4 points on everything.
That's what I'm saying.
You know
You
what?
can't read
Nicole, you
this.
remember that?
I gotta get it.
Do I need
I gotta get a drink. Hold on one second.
What kind of
want, Josh?
old
You
fashioned?
said I'm not
We
going to get
used
a
to
word.
drink beer.
Love it.
Oh, we remember.
You're just an all-star with no charts.
Yo, Fominator! All right, I got all bases covered. You need to get me quarter. You need to return your call to Straza. I have no more responsibilities.
Is this
I'm on
botchy?
Because Fahmy's ignoring Straza.
Croquet.
Straza's
No, it's
butthurt.
croquet.
It's croquet.
It's croquet.
Never mind. You guys have the internet?
Yeah. It's
The
a
whole
Ritholtz,
internet.
whatever Ritholtz Wealth
When'd you
Management.
get a new computer?
Sounds like a game war.
This isn't recording yet.
Password is caps, no space.
The HM is. Oh, is HM not?
Who's Straza again?
Is it? Have you guys changed passwords?
Oh, I was about to say, what?
So we're good. Just don't
Kidding.
change passwords.
What's up,
whatever
Rob?
you
Change
do.
your passwords.
How you been?
Red Hole's
All's
conspiracy
good.
How
theories
you
are
been?
just not
Hey, Ben. Hey, Ben.
not welcome
Dude,
here.
this is a big event around here. Just letting you know. When JC and
Just
Bob
a heads
show
up to believe the password.
What is this?
Not,
what is-
not to hype it too much.
John at Ritholtz Wealth.
No pressure.
That's me. You're still
Yes,
employed here?
sir.
Surprisingly.
It's all good.
All right.
Fahmy, you unwound your yen reverse.
Yeah.
Double reverse carry trade. Was it a double reverse
My
carry
Jim
trade?
Carrey trade? Yeah. That's what I did.
Dude, I've been carrying that shit for decades.
You were early to point out the yen as a safe haven. Beware. JC taught me that in 2011. True.
What's the difference between croquet and
No
bocce?
comment.
And what?
Bocce.
Croquet is
You hit it with a hammer.
You like put
a subset of bocce.
Oh.
Croquet. Croquet is but a type of bocce. I don't know.
It's like a bougier, douchier bocce.
Douche your bocce?
Like douche, because you could be like just a degenerate.
People don't play croquet anymore. It's not even really.
So-
You're just
In-
not,
in
you're just
India,
not
what do
that
they play in
douchey. You're not
India?
douchey enough.
They
Josh.
play it in
You got to
India.
step up your douchey.
So Axel, I sent this to you, but Axel Rose came out at Billy Joel.
Yeah.
He looks like Lindsay Lohan's mom.
His hair has got it, yeah.
Fahmy, dude, I went to Slash on Monday.
How was it?
You wouldn't know because you didn't come.
Yeah.
It was incredible, dude. Fourth row, $31.
Where?
$31.
That's a lot.
Fourth row.
That's a lot for that band.
Dude, you're such a hater.
Where did
Just because
wait,
your
where
boy's not the drummer.
It's a all right.
Where did Slash play?
He played by me. He
He
played at.
food truck festival or something.
Joe,
No.
do you remember we saw him at the Paramount in Huntington?
Yeah.
And we were like sitting in the rafters right above him at
Yeah.
the end.
Yeah.
That was like next
That
level.
was fun.
So my friend Adam, who was there, is like the biggest Guns N' Roses fan in my
Oh, that's
life.
right. That's right. We went to talk to Miles. I remember that.
Dude, he lost his
He
mind.
He was really happy.
I actually only have 35 charged today.
Only 35, so I can get a word in. Let me get my notes back out.
Because I figured,
You only have 35 charts?
I know. I mean, I could do 350.
We know you can.
I had sushi today. I had other things going on.
Can I play something for you guys while we're warming up?
Headphones on.
Headphones on?
Do you have a? Did you just drop a diss track?
No.
Yeah.
I don't diss anybody.
Mm.
All right.
Mm-hmm.
But you should study history.
Oh,
And
Peter
history's
Lynch.
the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do.
Can I get some juice?
The market's had 50 declines of 10% or more.
Scoot over.
So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the
Not my
company, you look at
problem.
the balance sheet, and they're doing fine.
I
You're
hope it
hoping
goes
get
to 0.
22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own.
All right, so that's Peter Lynch, who of course is one of, I don't know, is he Mount Rushmore?
Is he the guy that would go to malls and
Yeah.
like buy stocks
That's
based
not,
on
that is a gross overgeneralization, but
he's the guy.
Yeah,
He's
go
that
outside
guy.
and see what people are doing.
it's
He's
not
one of the best.
exactly the
One of the
strategy. But
So what happens now that these malls don't exist? What do people
so
do?
can I tell you something
go
about
on Amazon.
Peter Lynch? They go to Amazon. He retired at the peak of his performance, and I think 13 years he ran Fidelity Magellan.
Magellan, yeah.
Okay, he retired in 1990. And he's still around.
Yeah.
Think of how much he missed, and I wonder, could he have kept that going?
He said he stopped because he remembered 3,000 symbols and forgot his daughter's birthdays.
Okay,
Like he was so he's like, I gotta quit because
but
that
he
was
like
one
went
of the
out on a
reasons.
high note. He didn't go out after a year where he crushed everybody.
Right.
And that's sort of rare.
By the way, was that 87?
He gave that speech in 1993, which is 31 years ago, and it's still true. Everything he just said is still true. The stats are different now,
John.
but it still roughly holds true.
His performance he privately managed like GM or Ford, I forget which one, their pension plan, but because he didn't have the limitation of a 5% max position in Magellan,
Yeah.
he was able to take bigger positions and had better performance for that.
He could get more concentrated.
Yeah.
Okay.
That was one of the first books I ever read
One up on Wall Street?
One up on Wall Street.
because of you.
Yeah.
You told me to read that.
He's one of the best. But
Somebody
no one
handed
talks
me
about
that
him
my
because he hasn't
first
been
year.
around in so long.
But he's still he's in the world. He's still
Oh,
around.
yeah.
Be interested. He doesn't weigh in on markets all the time. He's not one of these guys that's like still looking for attention.
I feel like every year or two he comes out with maybe 3 years an interview.
So he, I think, dedicated the rest of his career to philanthropy. I think he made a ton of money.
Yeah.
And he's not one of these guys that, when the market is going nuts, he's not calling TV producers like, I have something to say. He just,
Do people do that?
yeah. But no, I guess my point is he's like really retired.
His last CNBC interview, he gave one stock. It was Wingstop. It was like 160, and then it tripled.
See, he's still doing the mall thing. See?
He's still going to this.
Hold on.
He stays going to the mall.
Can we talk about the elephant in the room before we get going? This is really important.
There's an elephant here.
Okay.
Michael Batnick,
What's up?
Elephant.
Archie Manning, the stockbroker.
Did you
Listen,
appreciate that?
I just assumed that
pissing
we
myself.
all knew
I
he
was
was
urinating
a
my
quarterback.
Can we just talk about that for 1 second?
That,
Your father,
The
who was a
stockbroker.
stockbroker.
who happened to be
Famous stockbroker.
No, but Eli's response was like,
Yeah.
think about how many times he's heard his father be introduced
the quarterback.
over the years.
Yeah.
Now,
Dude, Archie the broker is one of the greatest.
Oh wait, who got me that for my birthday? Was that you?
All of us did.
Yeah.
So Archie, the stockbroker, for what's that thing? Patreon? Is that what it's called?
Video.
No.
Cameo.
Cameo.
They got Archie for my birthday to say, "Hey, Michael, this is your favorite stockbroker.
oh my
Wishing you a happy
God.
birthday."
Can you send me that?
That is
Yeah.
priceless.
Oh my
That is
God,
priceless.
that is so. And by the way, Eli will never forget that.
Of course not.
So if I ever meet Eli, I'll be like, "Yo, you know that idiot that told that's my boy."
He's seen a lot of people, a lot of fan idiots. Nobody's ever said your dad the stockbroker. He'll remember it.
ever.
Yeah.
That sticks out.
In Michael's defense, he was like suppressing like hardcore emotion that day. He was like very focused on not falling apart in front of Eli. Eli's like his hero.
I know.
So like that was the only thing that he said that day that was absurd. And I think we got to give him a
It's
lot
impressive.
of
No,
credit.
that was the
We gotta give
funniest
credit
shit I've
That was
ever
great.
heard.
That was good.
That was so good. It was
Thank
so
you.
good. It was so I just wanted to get that out of the way.
Thank you.
I was
Oh,
crying
Well,
laughing.
before we get to the show,
He's trying to stop crying, and I am like literally in tears.
JC, before we get to the show, so Sean's here. I've been telling Sean a lot lately that gaps get filled. I want to hear from the master of charts. What's your take on gaps and the proponent of them getting filled?
Some gaps get filled.
How do you think about gaps?
It depends. There's a lot. This is a whole episode on its own, but there's all different kinds of gaps.
Wait, so you don't
There's-
agree with what Michael's saying?
Well, breakaway gaps by definition don't get filled.
Eventually.
Right. No.
No,
No, not necessarily.
not necessarily at all. I mean, maybe one day, but that's not even. But it won't matter at that point.
What's the difference between a gap and a breakaway gap?
Well,
a breakaway gap is
is
a gap that
type
doesn't
of-
get filled.
Well, it's a type of gap. So like you have like a base, let's just say, or consolidation, and it gaps up and goes like a gap
Wall
and
Street
go.
misprices,
But you don't know that it's a
misprices
breakaway
everything.
gap until later.
Here,
You
great
might
example.
not know, but
You
JC.
know in real time.
No,
Like,
look.
like
but
the,
you can-
the company is mispriced by Wall Street.
Yeah.
Like 1992, Microsoft is like
There's a
breakaway
million
gap that's
examples.
never
So
going
look,
to get filled.
here's the latest one. So Nvidia in May of 2023
Yeah.
gapped from 30, probably 300 up to
250 to 400,
360,
yeah, or
and it never
whatever.
looked back. That
Yeah.
was it. It was
That's
gone.
a breakaway
Gone
gap.
forever.
Because they mispriced the valuation.
So that gap will never
and
be
then
filled.
there's exhaustion gaps, which by definition get filled right away,
Right.
right? Because it's an exhaustion.
I'm just saying, as a gap is happening, you can't point to it and say this is a breakaway gap. You have to wait 10 years.
No, you can wait like a week or two.
No, you
if
can
it
know
doesn't-
the day
if it
of.
doesn't take out that low.
And you can anticipate it as well. You'd be like, has all the characteristics of a breakaway gap. We keep running into resistance, keep failing, keep failing, keep failing. There's a catalyst next week. We could gap above that resistance and take off. That happens all the
It's
time.
usually news that they have to reprice everything. Like
Yeah.
Green Mountain, they said their Keurigs are going into Walmart. It just
Done.
gapped up.
Yeah.
done.
It's like a right.
You know.
It's like a technical thing that happens in response to a transformative
Yeah.
corporate event.
Or 30 analysts follow NVIDIA in that example. And
But-
they're like, we were way off.
But in the drugs and the biotechs, there must be breakaway gaps all the time. Then
In ADRs, there's gaps every day.
Forget about
Wow.
ADRs. So
You know.
stocks that gap or up or down 10% within 1 year, how many of them get filled if you had to guess? Would you say
That's a larger percentage.
just guess.
Larger percentage, I would say.
half or less?
It's environment
more.
dependent.
I know. Guess.
Like if it's a messy environment, then they're all going to get filled. You know,
Yeah.
like you don't quantify that.
but you get
It's not a
like
breath
you
thing.
get like a $300 million market cap biotech, and they're in like a partnership with Bristol Myers,
Yeah.
and then there's an approval of a drug or a phase 3 trial that goes really well, and you could have like a $6 stock open at 18. That gap doesn't have to get filled ever.
So hold on, I don't know if you've seen this, but it's usually the opposite. It's usually 18 gapping down to 6.
Well, when I own it, yes, I've seen.
You're
it.
the one who told me never screw with these little biotechs. That was a good
I
lesson
don't-
you taught me.
I don't play with that shit.
I
What
know you
about
told me that.
Baby Gap? What's your thought?
I don't
on
have the
Baby Gap?
knowledge base. I don't have the knowledge
But
base to do that. There are people that do that 24 hours a day. That's their job.
They think they have the knowledge base.
Well, there are hedge funds that are dedicated healthcare hedge funds. Imagine trading against people that eat, sleep, and breathe clinical trials
Baker Bros.
and talk to doctors. And I'm looking at a chart. I mean, there
Yeah.
are some things that like are not for traders or casual
Agree.
investors, and that's a big one. All right, how we doing? We ready to click it up? Yes. We have everybody's charts.
All right, Sean, that was underwhelming. Stick with me. Gaps get filled.
Ladies and gentlemen, since 2008, Global X ETFs have been committed to empowering investors with unexplored and intelligent solutions. Global X specializes in ETFs that track emerging trends like the rise of artificial intelligence, as well as strategies aimed to generate high income potential. Visit globalxetfs.com to explore a lineup of more than 90 ETFs, along with insights to help you navigate a dynamic investing landscape. Oh my God. Yo, this has the makings of the best show of the year. This could literally be the best show of the year. Don't f it up. That's all I want to say. Don't screw
Keep the
don't screw with the
expectations
potential here.
realistic.
Ladies and gentlemen, welcome to the best investing podcast in the world.
Wow.
You are now rocking with the Compound and Friends. My name is Downtown Josh Brown. I am here with my co-host, as always, Mr. Michael Batnick.
What's up, fellas and ladies?
Let's hear it.
Let's go.
With us today, 2 returning champions. JC Parets is the founder, chief strategist for All Star Charts, a technical research platform for hedge funds, RIAs, family offices, and individual investors. Make some noise for JC. Joe Fahmy is a portfolio manager at Zor Capital. a New York-based investment advisory firm. Joe has 27 years of trading and research experience and has
3
appeared,
good ones.
Yeah, has appeared on CNBC, Yahoo Finance, Wall Street Weekly, and more. Joe, welcome back.
Thank you.
Round of applause. Okay, you could push that mic out of your way. You're not going to need it.
JC's got 100 charts, so I'll just
All
sit
right,
back.
and can I point out that today is the 5th appearance for JC Parets on the Compound and Friends.
Is there a jacket? Do I get a jacket? Do I get a
Does he
fifth
get a punch
timers?
card? Does he get a punch card?
There's actually
Stop it.
there's a hoodie.
That was literally a joke.
No,
Oh,
but
he gets a hoodie.
But in real life.
Oh!
Come on.
That's good.
Dude, are you
wow.
serious right now?
How fly is that?
Dude!
That is like,
Wow!
that's the greatest gift you've ever
Wow,
received.
what is
It
this?
said made in Miami.
It says Miami made me.
Miami, yeah.
Come
It
on.
did.
And then I'm an astronaut now?
Well, that's Pharrell Williams. That's
Yeah.
Billionaire Boys Club. So that's that.
Wow.
Thank you for your
Wow.
fifth appearance on the show. Both you guys are fan favorites. We're so excited to have you here. Obviously, we can't time these things in advance, but you are here on the heels of one of the most interesting weeks we've had so far in 2024. Lessons were learned. Traders have adapted. Investors have had to learn about things that they never before considered, like the effect of carry trades on the stock market in the United States.
Dude, this year was boring kind of up until now. You must love this.
Yeah, now it's
Right?
going.
I love it all.
No, I know you love it all, but
Stick it in my
I
veins.
love low volatility.
So Joe, you wrote about why sentiment changes so quickly, and I really think that this is the big thing that happened this week. Nothing fundamental changed.
No.
Everything that's taken place in stocks since last week was sentiment driven. You had fundamental events. You had disappointing AI cloud growth numbers from some Mag 7 names. Buffett sold half his Apple. You had a jobs report that came in below expectations, put a little growth scare into the market. And you had this currency-related thing happen between the Japanese yen and the rest of the world and some ripple effects from that. But really, like, sentiment was the big thing that shifted. We didn't, like, all of a sudden fall into a recession. It's just that everybody started talking about a recession all at once. So I wanted to get, rather than quote your piece, I wanted to get from the horse's mouth. Why does sentiment change so quickly?
I feel like when I started doing this, it used to take about 2 to 3 months for sentiment to change. And now I think it takes 2 to 3 weeks.
Yeah.
days.
And if not days.
Yeah.
And I have a list of reasons. One of them is information's being disseminated a lot faster.
Fact.
So everyone's looking at their balances, real-time phone, everything, where in the old days you'd get, I sound like I'm 100 years old, but you'd get like a monthly or quarterly statement. Now everyone has their balances, net worth, everything if you want in real time, and people are checking it 200 times a day.
Yeah.
So it's that, and then we're inundated with information, bloggers, financial networks, social media platforms where there's everything going on. So
Apps, real-time
apps,
alerts,
everything.
constant,
chimes,
constant
everything.
triggers
Yeah.
for people to do something or not do
So
something.
it's the casino environment. No clocks, no windows, keep people engaged and keep people moving. It's the same thing with all this real-time stuff. So that is sparking emotion.
Yeah.
That is sparking higher emotion and sentiment moves faster than it used to be.
I feel that we have to stop thinking about historic bull and bear markets because we basically experience these things so much faster now. This idea that like the average bear market is 13 months. We had one in 2020 that was 13 days.
Yeah.
Okay. We had one in 2022 that was like, I don't know, 8
9
months.
months. Yeah.
9 months.
8, 9 months. Yeah.
It was a legit bear market. Nobody would say it wasn't.
Yeah.
But like, they don't need to go on and on and on and on the way 2000 to 2002 was, for
Right.
example. They don't have to be multi-year events anymore in order for them to qualify as a full cycle turning its way through.
Things happen quickly. Things happen a lot faster. Maybe it's technology. And, another point I made is we live in the most impatient world ever. Everyone wants to do 10 sit-ups and they're like, why don't I have washboard abs? It's like literally everyone just wants to make $10 million by Thursday.
So all right, so
In
let's
2
double click
days.
on that. You said because of this impatience, people are using a huge amount of leverage. Leverage includes options, weekly options, 0 days till expiration options. Over 50% of the options traded every day expire by the end of the day.
Over 50% of options traded every day, or more than half, are zero ZTE, meaning 0 days to expiration. Yeah.
This mimics society. People want to go on Instagram and be famous the next day.
Oh, absolutely.
Like people don't want to put in the time to generate career success. They don't want to put in the time to generate market returns.
No,
they want it now.
I want to make $10 million in 2 days. And because of that impatience, it's leading to people using more and more leverage. And when you use leverage, that first 5% pullback on the S&P to the 50-day, the NASDAQ corrected about double that. It has higher beta. A lot of stocks drop 20, 30%, growth stocks. And if you have options on them, you get wiped out. So if that happens in like 3-4 days, sentiment goes from I'm going to go buy a Lamborghini to like I'm getting ramen noodles tonight. Like it just switches completely.
When you saw the VIX at 60 on Monday morning, did you say what I said, which is this is the dumbest shit I've ever seen? Or did you think about it a little bit more seriously than I did?
I think that you say this is the dumbest shit I've ever seen more often than I would.
Okay.
I think. But I think you're spot on.
Okay.
And I was watching the VIX in real time and being like, I've seen the VIX do this. And usually the market is doing something way different than what it's doing
It's
now.
not 9% off its highs.
Yeah, it's usually 30%.
It was down 2 to 3%.
And also, remember back in the day when we used to have real VIX moves, you would get swings up, swings down.
In the middle of the day.
In the middle of the day. Limit up in the after hours, limit down in the pre-market, up, down, up. It was just a nice, orderly little day. And I think I found the answer as to why you thought it was the dumbest shit. And if, John, if you can go to slide 132, please. No, just kidding. Slide two.
Of 2000.
See what I did there? You guys thought I was serious, right? No. Slide 2, please, if you will, my good man. So
what is this?
So for you math majors out there, the mathematics behind the volatility index that is the VIX, which measures the volatility of the S&P 500, is very complicated. I don't know if you've ever looked at it or tried to replicate it.
A lot of what have yous.
Yeah.
Think about the craziest math you've ever seen. It's way crazier than that. So there are little idiosyncrasies in the way that the VIX is calculated that options contracts way out of the money, very illiquid, wide bid-ask spreads can actually dictate the value of the VIX because it's mathematically calculated versus a traded product. So in this case, you're looking at the math equation overlaid with the actual traded product, which is the VIX futures. So while the VIX mathematically was at 65, the VIX futures were nowhere near that.
Does that ever happen? Does that difference ever occur to that magnitude?
I've never seen it. I mean, you could go back and see. I don't like to overcomplicate the VIX. It's very easy to overcomplicate it, overthink it. I'm not going to do that. I never have. It's a bad idea. But this actually makes sense to me.
How does this happen?
Because one is a traded product, which is the VIX
futures themselves.
And the other is just a math equation that can be dictated by things that aren't even traded. They're just bid-ask spreads way out of the money. So I don't want to overcomplicate this, but this is, I think, a big part of the answer to this shit is stupid and mine. This doesn't look like other
37
times.
makes
Go
sense,
back to
though.
the last slide, though, because I have a question. This is the third highest VIX since COVID and the financial crisis.
That was the big joke on social media.
Right, but this was not either one of them. So how do you explain that? I don't follow the VIX that much.
I think this slide explains
just hold on, keep this up for a second. So the joke was, probably Doug Bonaparte, according to this VIX chart, the 3 worst events to have ever occurred in my career: 1, great financial crisis; 2, COVID; and 3,
Monday.
The Japanese central bank raising interest rates by 25 basis points.
Yeah.
It's a great joke.
Shout
to Doug.
Shout to Doug.
Yeah, it's a good
But
joke.
that's how stupid this looked to me.
But usually these type of VIXs above 40, 50, 60, whatever, is associated with a major disaster in the markets.
Yeah, I couldn't find one.
This wasn't. This was like we gapped down.
That's the next slide. So JC, what's the takeaway from this?
So the takeaway is this is one answer to why when I was looking at it, I'm saying, yeah, this is it. The Dow's down 3%, 2%, or the Dow was down 1-something%. The Nasdaq's down 2-3%. I'm like, this is all you got? And oil is up, and you know, copper is flat or whatever it was. Like, I'm like, this is I've seen this before. This ain't that.
It's false.
You know?
It's forced selling. from a few participants who
Nailed
had
it.
to unload stuff.
Nailed it. This is forced selling, forced liquidation. Margin clerks don't use limit orders, so they spray the market, and maybe they're trickling in, so we know who blew up. Chances are it's a few funds, most of which we've never heard of. They're Japanese leveraged funds that were too leveraged. They got to sell risk assets to buy back their yen.
Right.
So then other people who own those risk assets, they get knocked down. It's just a domino effect.
But so to
and it all happens at the same time.
Josh's point earlier, you also had this within the confines of Buffett selling, within the tech stock narrative maybe changing. So it was like fuel on the fire.
Kamala Harris flipping Trump.
All that. So Jim Bianco did a thread, and he showed, JC, you probably follow this, Investors Intelligence Survey of stock newsletter writers. This goes back to the 70s. And
60s.
he showed the 2-week change in bulls and bears, and he says this metric suggests that investment professionals who get paid to write newsletters freaked out about the stock market over the last 14 days to a degree not seen in the last 37
That's
years.
exactly my point.
So it
with the
was a-
sentiment.
It's not true.
It switches so
That
fast.
No,
is
that's true.
That is true,
The
Josh.
sentiment
No,
change-
that's true. What I'm saying is that everything is hypersensitive now. I don't believe that
2-week
newsletter
change,
writers.
the worst since '87.
No, that's math.
Newsletter writers, to be fair, were the most bullish they had been in 3 years since the
Leading up
last
to it.
top.
And then last thing, this also came within the confines of a historically, maybe not historically, a very calm market. And this shit came out of nowhere.
No, VIX was at 10. It's
so
calm.
people were really,
Not only was the VIX at 10, but you had in the month of July the most amount of new 52-week highs on the New York Stock Exchange, this entire bull market. You had the most amount of new 52-week highs on the NASDAQ, this entire bull market. You had the most stocks on the New York Stock Exchange above their 200-day moving average than at any other point in this bull market.
Yeah.
So things technically, mathematically, any way you want to look at it,
perfect.
have
We're
not
really
been better
good.
at
We're
any
we
really
were
point in this
not
bull
ready
market.
for bad news.
right.
So throw up slide 10 and you'll see this. So this is a sentiment
We're
composite
on
that we bring
132.
up
How do you go from 132 to 10?
because we're bouncing around.
All right.
We're bouncing around. We'll get to the so this is the composite that Josh likes. So this includes individual investors, the newsletter writers,
Oh, I love
the
this one.
active investor
Wow.
managers
I
that
love this. I
Fahmy
love
likes,
this. It's a
and then it includes all the volatility stuff. So,
So
this
people
is
did freak out.
no. This is pre that. So we're coming off extreme bullish readings pre
a lot of complacency.
Volatility.
Take
Mageddon or
that
whatever.
sentiment composite and look how like complacent everyone
So you know
was.
what? People were like chilling out in a pool, laying on the balloon, and a tidal wave hit them.
And you got. Have you ever been to a strip club at lunch?
No.
Right. The market.
Not since Tuesday.
The market
but-
last week was like that. Like go to the B squad, C squad if you're lucky. That's who's on the desk at the hedge funds in Connecticut.
Wow.
Where are they? Beamers? What was that place
It's
called?
actually
Beamers?
Pretty good analogy.
It's actually not bad, right?
But
Beamers was outside of the Greenwich County lines.
No, but the
So you could-
A squad that shows up on Saturday night at midnight is in the Hamptons. You know, is anywhere but their desk.
In the age of like tech, do we still really believe that that's a real thing? That like
I think
Are you
people,
serious, Josh?
people,
traders are not paying
people
attention.
underestimate
Are you
the
serious?
power of
I don't know, I'm asking.
psychology. People
Come on,
underestimate the
bro.
power of psychology in the markets.
Right.
When things are complacent, all of a sudden this news comes out, everything you listed earlier, and magically this is what happens. It's sometimes it's just the market needs to shake out bullishness,
You know what
just
Straza
like it
calls
needs
it?
to shake out bearishness.
You know what Straza calls it? Because Straza worked at SAC and other hedge funds, grew up in Greenwich, Connecticut. He calls it the parking lot indicator, right? Because when you're the low man on the totem pole out of college working at these hedge funds, you're parking probably in another parking lot. You're not even in the main parking lot. But then come July and August, when all the top 4 portfolio managers with the best parking spots are wherever, in
But
Europe,
I
in the
think what Josh is
Mediterranean.
saying, though, in the Hamptons, they can get on their computer in 2 seconds.
That's what I mean. It's not the same as being out of office 20 years ago.
You've been out of office
Mm.
and you're more of a bigger deal now. But even now,
I will still log in and save the firm when volatility hits. Michael
what I'm saying is like,
counting on me
let's
to do
be
that.
real. These people have families. They're out in the Mediterranean. They're drinking.
Like
I mean,
literally, like every other person I know is like actually in Italy right now.
Yeah.
Or Greece.
Yeah.
It's like the degree to which people are in Italy is higher than I can ever remember.
well, you just have more bougie friends now as you've come up in the world.
Not even people I know, just people that I follow, people that I hear about. Is anyone not in Greece right now?
It's August.
Yeah, no.
What do you want?
Okay.
People that I hear about, that was some Long Island hedge.
No.
Josh is hearing about people in Italy.
No, just anecdotally, I feel
Weren't
as
you just
though.
in Italy recently?
No, I didn't go away this year.
Weren't you just in Italy recently?
No, like 2 years
Last
ago.
year.
I don't know. No, I don't think so. Maybe.
What a great place.
Yeah,
Italy and
I'll go
Greece.
back right
Holy
now.
shit,
Nicole's
man.
on her way tonight.
I'll go back.
Is she in here?
Really?
Nicole's going tonight
She
to Milan.
left, she left already.
She already went to Greece.
Yeah.
Joe, you
Yeah.
tweeted on July 9th, the day before the top in the NASDAQ, that you were reducing investment exposure.
Yeah.
What did you know and when did you know it?
Lucky.
Let me read the tweet. I reduced my exposure into the strength this morning. Over the next few weeks, I feel the market will see a normal pullback and eventually correct down to its 50-day into August. In other words, it won't be straight down because the market is very resilient. I have a feeling Biden will step down from the race. That could be the market's excuse to correct a bit. Again, I don't think it will be a significant pullback somewhere in the 3 to 5% range, but the potential uncertainty from a Biden announcement could give the market the excuse it needs, to which asshat69420 responded, "F you, Joe Fahmy."
Pretty much, yeah.
Okay, that was super prescient. The Biden thing, I think a lot of people saw coming, but
Yeah,
so what?
I don't think that was
And that wasn't really the trigger anyway.
No.
But we did top in the big NASDAQ stocks, specifically NVIDIA, and that was pre-earnings season. And it didn't take long to get your correction. So what's in your crystal ball today? Have we done the correction? Are we good?
I don't think we're done with the correction yet.
Today was so far. Today
Yeah.
was a pretty good day, though.
Solid day, yeah. It will still be volatile, I think, through the summer or through September. I like to try to educate rather than just say why you picked it, is that I do what JC does, which is we screen the markets every night. We look at different things. He looks a little bit more global macro. But what I judge the health of the market on is growth stocks. That's what I'm looking at because that's risk on assets. So if I'm finding great fundamental companies, building great bases, breaking out on volume, holding their breakouts, that's healthy. I literally don't care what any of the news is. I don't care about anything except what stocks are doing. Because like Livermore says, follow the leaders. So basically you follow NVIDIA, follow Eli Lilly, Microsoft, those types of stocks. That's as the leaders go, so goes the markets. But all of those stocks were technically extended.
Yeah.
I don't use Fibonacci or any of that but I just know that they broke out of bases. They were getting exhausted. That was one reason. Sentiment was super high. We were heading into seasonally 2 of the weaker months. Second half of July. Into
August and October notoriously
Yeah.
are volatile months.
And the other thing is roughly, I don't have the exact like statistics. Every 3 months, roughly, the market visits its 50-day. And we had been about 2.5 months from visiting the 50-day. We had last visited in early May. So now we're mid-July, we're 2.5 months. So I didn't expect it to drop as quickly. I said it's going to drop into August. But even during the bear...
dumbass.
I know, so it's horrible. Even during the bear market in 2020, when we dropped for the first 2.5 months of 2022, sorry.
Yeah.
We dropped during the first 2.5 months. We had that counter trend rally back to the 50-day in March and again in June. So roughly every 3 months, not exactly, but roughly the market visits its 50-day, even when it's below its 50 days. So we were extended. And I just said, okay, there's not really any safe entry points. And that's what led to it all.
JC, how much technical damage was done on Monday? Like with number of stocks breaking through there, whatever day. I know there wasn't a lot of new lows, but like, what you're shaking your head, nothing?
Surprisingly, that was part of what I agree with Josh. This is the dumbest shit I've ever seen.
Yeah.
You know,
Super
I mean,
dumb.
you're right. That was pretty dumb. You know,
JC, what I said on TV was, if you're not leveraged, if you're not a hedge fund that's borrowing in yen and buying S&P stocks on margin, don't act like you are. Like, why do you need to do anything?
A lot of people are using leverage, not just retail investors. Clearly, hedge funds are because of the whole yen carry
Yes.
trade.
But JC, you might
Yes.
actually have a chart of this. If you look at, like, I'm making this up, new 20-day lows. That probably spiked.
slide 8, please, John, if you will.
What do you think when something like...
John's really earning it today.
I know you don't use moving averages as much as I do, but when something breaks the 50-day and just goes right down to the 200-day, is that, to his point, a lot of technical damage in your view, or is that not like...
I don't look at it at all. It means nothing to me.
Like it's like a big
You
wide...
look at weekly closes like I do.
I look at weekly closes, I look at daily closes, and I use moving averages to quantify market breadth, but I'm not like, Well, it broke the 10-day, so now it's got to go to the 20-day and the 30-day and the 47-day and the
does the
297.
wider ranges mean anything to you?
No, you're looking
No.
at the number of stocks above or below. So
Yeah.
what are we looking at here?
So here's the great thing about the market. And it doesn't matter if you're a fundamental analyst or a technical analyst or you look at the moons and the stars.
Or if you go to strip clubs during the day.
Yeah, you could do any of those things.
I don't judge. Mathematically, you cannot have a bear market or a correction of any kind without the prices of stocks falling. Fact.
Profound.
Yeah,
Fact.
yeah.
So if we know that we can't have a correction without the prices of stocks falling, why don't we take a look at how many stocks are falling in price?
Okay.
Like-
Seems like a novel approach, but
Sounds-
I'll go with you on that.
Seems like-
sounds pretty logical.
Call me crazy, right?
Yeah, yeah.
So if the world is coming to an end and the recession and Biden's ruining everything and the Trump and the war and the this and if any of that was true,
Yeah.
wouldn't the prices of stocks be falling?
I don't know what he
And
just.
if the
I don't know what he
VIX
just said there.
If the VIX
I don't
is
think he know what he
if
just
the
said.
VIX is f***ing tripling overnight, literally tripling overnight, you would think
Yeah.
the prices of stocks may be falling. As it turns out, they were not. So this is the 10-day
Well, they were
lows.
falling specifically on Friday and Monday.
Not really.
Okay.
No, actually.
Not really.
No, they were.
Tell
What are you,
Fidelity to take a
Yeah.
look at my account because
What are you, parked in utilities?
So, stocks at new 10-day lows was the biggest spike, something we hadn't seen since spring of last year.
okay.
But
That's a bullish wipeout.
I mean, I think it's just noisy. I don't think it means anything at all. I'm more interested in 1-month lows, 3-month lows, 6-month lows, 12-month lows. We got no expansion in 1-month lows at all. In
I know,
fact,
but give it a minute, right? Like, doesn't that eventually happen if it keeps going?
we've given it 4 days now.
Okay.
What do you mean? It reached the same level as April 19th.
But-
It couldn't reach the same level as
It's
April
the
19th.
same line. Oh, you're looking at 3 month or one? I'm looking at 1 month.
So 1 month, 3 month, right? Like these were not the highest spikes and new lows that we've seen in years,
So
which
they're contained to the levels of last fall
yeah, seems very
or
muted.
or the spring.
Yeah.
So in other words, you would expect to see the new lines way above.
You would, in theory,
And that
right?
If the
VIX
VIX
regime.
is at 60,
Yeah.
yes.
Yeah, you would
The
think so.
VIX
Now go to
60
go to the
regime,
next, go to skip 2 slides, go to the next one. So last month we got the most amount of new highs on the New York Stock Exchange this entire bull market. Same thing on the NASDAQ.
Is that
Next
bullish,
chart.
JC?
Is it bearish for more stocks to be going up?
No.
You know, for me, if go back and study every market top ever. I mean, it's a market of stocks. You see deterioration underneath the surface. You don't see breadth expansion. You don't see things getting better if you're trying to
Well,
tell me
to-
things are getting worse.
To your point, just before this huge sell-off, the predominant theme in the market was the Russell rip and thousands of stocks that had been doing nothing all of a sudden coming
The New York
alive.
Stock Exchange advanced decline line hit a new all-time high.
Yeah.
You know, like, I mean, it wasn't just small caps. You
No,
know,
the rally was
small
broadening
caps.
out.
Yeah,
The rally
you're
was
broadening out. That's
It's
right.
good.
Yeah, you're broadening out. And you're seeing that in the New York Stock Exchange numbers because remember, it's not the S&P 500 numbers. It's not the NASDAQ 100 numbers.
Everything combined.
But you got global equities on the New York Stock Exchange, small
Closed-end
caps.
funds?
No, this is
No?
limited. We
Okay.
exclude. This is
Okay.
stocks only. Yeah, we exclude all the other stuff. Yeah,
JC, let's go through some charts. I know we did a couple already, but let's turn the screen over to you. Take us through what you're seeing.
I mean, we could start in a number of ways. I would
Start from the beginning.
I'm just going to piss everybody off and start in a place that I think, not piss you guys off, but piss my people off, and start in a place that nobody wants to talk about.
Okay.
And that is transportation.
Okay. Why doesn't anybody want to talk about it?
Nobody cares because this has nothing to do with AI and the chips and
Right.
the thing and the future, JC.
You're starting to talk like an old Jew from Miami. I just, I mean, you grew,
Aha.
I know you're Cuban, but you grew up in Miami, so I know there's some
I want
cross
to talk
pollination
about
between the
transports.
two
and
communities.
then I got to Wall Street at 22,
Yeah.
so there's that.
And then there's that too.
All right, talk about the transports. What are we saying?
So throw up slide 13, please, if you will, John. So here we have the world's most important index, the Dow Jones Industrial Average, making new all-time highs, highest monthly close in the history of human civilization.
End of July, highest monthly close.
For
Yeah.
the Dow Jones Industrial Average. And then you will notice that the Dow Jones Transportation Average has yet to do so.
Mm.
So is it that, oh shit, transports aren't confirming,
Dow,
or is
Dow
it
theory? Is this old school Dow theory?
this is part of Dow theory? This is in the top 10 most important Dow theory tenets, in my opinion. But nevertheless, you can look at this as a divergence that transports are not confirming, or is it that they're not confirming yet?
Yet, because this is not pointing downward.
I agree.
Doesn't a divergence have to be going in a different direction?
Well, one's going up, one's going sideways.
Right.
But
All
yeah,
right.
I'm
If
in
you were
the
a DJ, would you be DJ Transportation? Would that be your name?
DJ transportation. I don't
DJ
know.
Industrials.
I'm probably more of an
I
industrial
feel like this
guy.
is poetic. One of the worst charts out there is UPS. See that piece of garbage?
I do.
Look, that's a gap that's getting filled from 2021.
Ain't that some shit?
Yeah.
Not
That's
a breakaway.
probably-
guy.
Okay. That's probably what's
it's,
weighing
it's
down
too
on it.
soon to pronounce this a negative divergence, is what you're saying. Like we can't definitively say that this is not going to confirm.
I think it's a great reminder where if you want to get a better understanding of which direction this particular index is going, why don't you take a look at what's inside the index and see for yourself?
Let's take a look.
That's what I'm saying.
Show us.
But Josh's
100%
question is a great question because you can apply that principle to any index. Like, when you want to know what the Russell 2000 is going to do, why don't you look and see what's inside the damn Russell 2000?
Yeah.
But
Right?
to your point, no one cares about this, and they should.
Nobody cares, and I think they should. I'm old school, right? I've
it's
studied
important.
markets forever. I've been participating for several decades. I am still in the camp that it's these are the DJs on the ones and twos, right? Ones and twos. This is what you're looking at. Industrials and transports. And if you want to go, let's just go through them quick. Here's CSX Railroad. Does that look like a bear market? Does that look like a downtrend? Or does that
No,
look like a healthy consolidation with an
I
ongoing
would
uptrend?
I would buy that chart and then I would sell the false breakdown immediately.
No, that's what I would do.
That's what you would
That's
do.
what I would do. No.
I would buy this if I had to make a decision. This is a buy.
No, I sell the retest.
Okay.
All right, keep going. Union
Okay.
Pacific. This one out of Omaha, right? Look at that.
What did you just say?
Oh, Omaha.
There's a lot
Omaha.
of syllables in Omaha.
Yeah.
Oh, he said
Omaha.
Omaha.
Like it's Japan.
What are you?
You got
Audibling? Omaha.
Norfolk Southern. Do these look like downtrends to you?
They look.
These
they
are
all,
weeklies-
they all
weekly
look like
candlesticks?
the next breakout.
Look pretty
honestly.
healthy, right?
Yeah.
Look at JB Hunt. Looks
Not
at
as
the
good.
fine, but lower end of the range,
Yeah.
right? Does that look like it's going to break down, or is it digging in and looking to rally, right?
See, these are the things I don't touch these. I don't like this no man's land in the middle of a consolidation. I let it play out.
Yeah.
Fine.
Yeah.
Fine. Fair. Landstar.
I like
Ooh,
this.
What is this?
Landstar. This is
Trucking and logistics.
logistics. They do a
Yeah.
bunch of shit.
Are they integrated?
They
What
are
do they do?
Indeed.
They do a bunch of shit.
They do. Well, because some transports are not just truckers.
highly.
Highly integrated.
They are highly integrated.
Yes, yes. For the record, my wife's in the logistics business, so I ask her about all these companies. And in a lot of cases, they do multiple things, right?
To
In some
Fahmy's
cases,
point, they do a lot of
they're
shit.
very
It's as simple
integrated.
as you can explain it.
Old Dominion, this is one of the greatest performing stocks in the history of the stock market. Just an absolute leader from a secular perspective. Very few stocks have done as good as this one. Old Dominion, does that look like a downtrend or just a continuation? Look at FedEx
Ooh.
pushing up against new all-time highs. Granted,
I
it's
don't understand the divergence between FedEx and UPS. I've never understood it. Like, how could that UPS chart looks as bad as this looks good?
Looks horrendous.
Right?
They just probably manage better. I don't know.
Yeah, it just seems weird to me. Okay, but this looks amazing. I would buy this.
Um,
Unqualified.
It came up
Yes.
pretty quick, so I think it's got some consolidation to do, but nevertheless doesn't look unhealthy. Look at Expeditors, again, absolute monster. There's one other integrated logistics company for you. Look at Kirby, which is marine shipping. Big base, looks a lot like FedEx. Look at Madsen, by the way, $4 billion company. I almost had to brawl with these guys in Guam once. It was wild. I was ready to throw down.
Why?
Why were you in
Well,
Guam?
you'll tell
What's
that story at dinner.
Yeah.
Look at
Tell-
that.
tell
Look at
us
that
later.
breakaway gap. Holy shit.
I didn't have
Yeah, the
to
thing got
brawl,
killed.
fortunately for the local Chamaros. But nevertheless, Madsen making new all-time highs. And then Ryder, keep going. Look at Ryder making new all-time
Looks
highs.
awesome. This
Why
stock
are you
looks
starting
amazing.
fights in Guam and at strip clubs?
I was
in the
not starting
afternoon?
fights, but I was
It's not a, there's a lot.
I was told to prepare
Okay.
because we were disrupting a monopoly that was taking place at the time by Madsen.
Okay.
My wife's company was coming in there, and the guy running was from Queens.
Oh, this is like real shit. This is not a bar fight. This is like business.
Oh, yeah. So Madsen had a monopoly in Guam because they don't grow anything. They don't make anything. Like everything gets brought in. So Madsen had a monopoly, and then my wife's company comes in, and the guy in charge is from Queens. So he's not fucking around.
No.
He's like, this is my money.
No.
And you think these Chamorros in Guam have any
If
chance
you're from Queens
versus
and
a guy
you're in
from
Guam,
Queens?
You're not messing around.
You know what I mean? So he's like, they don't like me around here, da 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 da. And I was like, I got your back, bro. Let's go.
Are we currently endangering anyone with this story, or everyone's cool now?
Oh no, they were the sweetest, nicest people ever. I'm like, these are the people you thought we were gonna fight.
Oh, okay.
No,
it
nothing
has
happened.
It has a happy ending.
But I was ready.
Okay.
Well,
you have a particular set of skills. Did you tell them? Skills that have been acquired over a very long career. I forget how the rest of it goes.
Chamorros are just not tall
Good
or
luck.
in good shape at all.
Okay.
In fact, the motto in Guam is half a day.
They look like Fahmy.
Like where you walking around, everybody says half a day, because they only live half a day.
My
And they
motto's
just
quarter of a
eat and
day.
sleep the rest of the day. That's another story. Anyway, Ryder new all-time highs, and then here's the good one, right? Next one. Fun fact: Uber replaced JetBlue
That's
in the
right.
Dow Jones Transportation
That's
Average
right.
this
Oh,
February.
so don't tell me nobody cares. I'm in this stock. People trade this stock. Somebody cares
Big
about some of
IPO
these.
base.
Well, you're like, oh, well, as long as there's a tech stock in the
It's
transports
not really
now,
a tech stock. It's logistics.
it's an industrial stock.
No, I understand, but it's like it's logistics. They don't own any cars. They don't own any railroads. They're just moving things around for people using tech. But I get why it's in the transports, and I never thought of it as an economic like a thing that would confirm the Dow. I never thought of it that way. But maybe it's a good thing to be watching. I don't know. They have like
I agree.
It's a
Look at the
$150
long-term
million
chart,
users.
John.
Yeah, indicator
So-
of consumer.
So
everything.
then here's what the transports look like long term.
Healthy.
Does this
Yeah.
look bad?
No. All right. So I like it. So the takeaway is if people would just look at these old school things that they've forgotten about, they would see this is obviously not a bear market or some sort of diversion away from the rally that we've been in.
We just had a bear market.
Yeah.
You know, we just had a pretty in-depth correction. I mean, when you go back to the February, March highs, I mean, most sectors and stocks have done nothing for 4 or 5 months.
So what you're
Like,
trying to say is nothing is dude.
I think some things are dude.
Like what?
Like UPS. Like
Why do people why do so many market participants seem like they want punishment
I have no idea.
or
I
act like they
hate when
like they
people-
deserve for things to turn against
People
them?
keep saying we need a bear market. We have to have a bear market.
why?
We just had 2 in the last 4 years.
Yeah.
And if you study, but why?
Real ones.
Yeah.
Tough ones.
But why do they want that? I don't know.
No, people have this obsession with wanting the Fed and the government to pay for printing all of these deficits.
Well,
They
it's
want
funny,
the
they-
chickens to come home to
They
roost.
don't want the Fed.
badly.
They don't want the Fed to interrupt and interfere in the markets. But when we gap down 3% on Monday, do an emergency cut. The same people. So that's totally contradictory.
Yeah, it just feels like there are a lot of people who can't get comfortable remaining long because they haven't been punished enough. It's almost like a weird.
It's torture.
It's like a childhood thing.
no,
I was
yeah.
gonna say it's like a
It-
sex
it pro-
thing.
It probably is.
There's a book,
It's like you-
Bulls, Bears, and Dr. Freud.
Yeah.
And it's all about how, like,
What is it?
men,
Who wrote
like,
that?
how we deal with stocks, like we date them, we get to know them, before we really dive in deep, a little
Right.
too deep sometimes,
So
right?
it's like I dumped Uber 2 weeks ago because like I was just dating. I didn't want it to get serious.
You sold
It's-
Uber.
It's
sold
not,
Uber.
it's not you.
it's an
sold
old
Uber.
book from like
It's
the
not
60s.
Uber. It's you.
Yeah.
Good book.
Yeah.
Okay.
I think people's views on the markets have to do with their current psychology, the period they grew up in, and the experience their parents might have gone through in the markets. So
That's
if you
probably right.
grew up in the Great Depression, you just hate the markets.
Yeah, of course.
I started trading 95 to 2000. That's why I lean bullish and I love like big winning stocks.
I do agree that's really important.
If you're going through a divorce or this family member's sick or something that's affecting your mind, that's going to affect your views on the markets. I think so.
I also think the status of your employment situation, you really don't love watching people celebrate big wins in the stock market if financially things aren't going great or you're at a point in your career where there's some uncertainty. I think it pisses you off watching people spike the football in the end zone every day.
Yeah, or if your parents just lost half their retirement in 08, 09, and that's all you heard growing up is how the stock market's rigged and I hate the stock market. That's how does that not affect your views?
Yeah.
Yeah, I agree. It's powerful, and there's both a short-term and a long-term component to
But
that.
think about how what they're doing about that. What they're doing about that is trying to make themselves feel better because they can pick on the Fed and say the Fed is doing it wrong. The Fed should be doing this. This is what the Fed should be doing. So they spend so much time criticizing the Fed that they're completely forgetting about why they were in the market in the first place is to make money for themselves.
Oh, dude, there are people that we have watched spent the last 15 years tweeting political cartoons making fun of the Fed. It's like, could you imagine you put 1% of the effort that you spent on that bullshit and like actually learn something about long-term investing?
Oh,
1%. Like this daily bullshit about how
every day.
Like everyone who's making money is illegitimately benefiting from the stock market, and the stock market's illegitimate, and the Fed. It's like, what if none of that were true, and you are just an asshole?
What if there
You know,
were
it's
some
possible.
companies
Well, that is what it is.
What are there some companies that are actually growing and doing well, and you're investing
No,
in
that
them?
can't be. That can't
They
be.
don't like.
Why would that
They
happen?
really don't like that chart of long-term S&P 500 earnings relative to long-term chart of stock
Oh, how about the
prices.
compound interest chart? They really don't like that
They
one.
don't like
Because
that.
that
Okay.
makes too much
Can
sense.
I show two more trannies, please?
I want, but
these are not-
we refer to them now as transports or transport Americans.
We did this last time.
Yeah, we don't use that term.
So there's two that didn't make the cut. So the
He's the least woke. He's the least woke person I know.
the D
Definitely
squad,
not.
if you will.
Okay,
So this is a $700 million trucking company from Tennessee,
what is it? Covenant Logistics.
and it's making new all-time
I
highs.
never even heard of this.
Well,
I know.
obviously. Mike
And
Pat.
also the Hub G from Illinois. Shout out Illinois. Also very integrated, Michael, and also making new all-time highs. So I would encourage everybody to not only take the time to go through the 20 stocks that are in the Dow Jones Transportation Average. It'll take you a hot second. But also understand that there are other names down the cap scale in transportation that also look great. So the sum of the parts weight of the evidence analysis that we do, I think is great, but any idiot can do it. It's 30 stocks in the Dow.
By the way,
it's 20 in the transports.
This is the original index. Was this with the transports before the industrials? I think they were. No,
No, the
They were the
industrials. The industrials
railroads,
were
that's
all
right,
railroads.
That's right.
No,
No, they were the railroads.
there were the industrials index and there were the railroad index.
But what was in the industrials? I thought it was
U.S.
in
Steel.
1896.
Bethlehem Steel.
Yeah.
There's no GE in
yeah,
1896.
G was in the
chart
original
of it.
Dow.
It was.
Uh-huh.
Oh, was it Edison? It was Thomas Edison's thing before it was GE.
Westinghouse.
General Electric at the time, yeah.
Okay,
Yeah,
and then there was a railroad index.
It was the railroad index, which was
All right.
like 10 or 12 stocks, or maybe 8. Maybe the Dow Industrials was 12, transports were 8. They were all
But
railroads.
The railroads were like NASDAQ stocks back then.
Oh,
they
yeah.
were the
That was
high
the
data.
crack- that was the crack of the time.
Right. Well, that was like the internet, the rails. And
Absolutely.
people traded them like we trade
Literally, there were
semiconductor
like
stocks.
200 or 300 rails that all went up just like the dot-coms because that was the invention
Do you
of
think
the
there was
time.
people in 1896 saying these railroad stocks are such a bubble?
yes.
Yes.
Yes,
because they were.
absolutely.
If
Well,
you had to
remember,
get
there were
from New York
panics.
to LA, it would take you 3.5 years.
Yeah, but understand,
you know?
there was a panic every other year. It was like the panic of 1884, the panic of
Yes,
1887,
yes,
the panic. I
yes,
mean, there was a lot of bubbles.
Also,
I remember them well.
all the scams and frauds were related to transports. Before there was oil, oil was not a thing in the stock market yet. But canal stocks, they were like SPACs. Basically, it'd be a guy be like, hey, we're going to dig a canal, which before there were rails, that's how you moved heavy shit. By the way, that's why Procter & Gamble's based in Cincinnati, because of the river system. You had to move a lot of goods to people. But that's how they scam people, with fake canals. And then the railroads had more booms
Fake
and
canals?
yeah.
Yeah.
Well, they'd be like, yeah, we're going to make a canal, and
SPAC.
everybody would
Yeah,
invest.
yeah.
SPAC for
And then they would
canals.
just disappear.
They were
as
the
a
meme
SPAC.
coins of their day, is these fake canals. So you had the companies that made the goods, in theory, the companies that made the
Strong
goods and
close.
the companies that delivered those goods.
Strong close.
That was with the industrials and the transport.
Can I ask you this question? I said 5 years ago or 7 years ago, and it sounded really smart when I said it, so I kept saying it, that semiconductors are the new transports.
Yeah.
Agree.
You agree with that statement?
Yeah, I'm with
they
you.
go in everything.
My big idea is that a lot of the earnings in the market are now coming from intellectual property and communications, and those things are not moved by rail, they're moved by semiconductors. If that's true, the semis do not look as good as the Dow transports right now.
The answer is it's not an or, it's an and.
Or semis are the Dow transports for the NASDAQ.
Oh.
I just don't think that we need to overcomplicate it. Like, we have two perfectly good indexes. We have plenty of data. We know the components and the
All right.
sum of the parts, you know?
When you look at the semi space, do you see the same kind of confirmation that you're seeing from the transports?
Yeah, you could
'Cause-
throw up slide Throw up slide 4. So we're looking at the S&P, the NASDAQ, Google, and semiconductors, all reaching perfectly normal Fibonacci extension levels from their entire, bull market basing process. And they all halted at those levels. I don't think it's a coincidence. Like, look at S&P.
I do.
So 161.8%.
You don't believe in Fibonacci extension
It's
stuff.
just math.
Yeah, I mean, you can argue that this is just one giant coincidence. As somebody who looks at these every single day for many, many years, it happens quite too frequently.
It's not a coincidence. Google is one of the largest components in the NASDAQ and the S&P 500.
Yeah. Is it a large component of the semiconductors too?
No. It's a large consumer of semiconductors.
So it's 4% of the S&P is 5% of the NASDAQ. So it's big, but it's not like outrageous,
It doesn't swing the whole thing by itself. But back in the day, any 5% stock would have been really important. Now we take it for granted.
Yeah.
Okay.
But my point, they're consolidating in normal ways. You were talking about, Fahmy was talking about growth stocks, how he looks at growth stocks as a bull market indicator. I think that's spot on because when you study every bull market over the last 100 years, technology is a leader and an outperformer in pretty much every single one.
Everyone.
With very few exceptions. I think there's 1 or 2 exceptions. Tech is an outperformer. So if Fahmy's looking at tech and growth as an indicator for the bull market, like
It's
that's
almost
what
like
you should be doing.
It's like a shortcut.
It probably wasn't a leader in the run up to the GFC, like in 05, 06.
It was an afterthought, dude. Remember? Nobody cared about tech. It was industrials,
It was
energy,
getting-
financials.
That's pre-iPhone. It was pre-everything.
Getting, the leadership was getting thinner and thinner, like all the way up until like October of.
But I'm saying like 03, 04, 05.
It was
like,
RIM, Apple, and Google, and that was it.
Right.
This
That
is
was going
it's
up
a really
there.
important point that you bring up. The sentiment on large cap tech was still in an overhang from 2000 to 2002. So in the year 2006, nobody wanted to talk about Cisco, Microsoft.
What was it, banks and home
5
builders?
years, 5 years earlier,
Yeah,
they
home
had
builders,
just gotten
yeah.
the shit kicked out of them. It was really, I mean, JC and I will argue this with anyone. If you weren't trading energy stocks, you weren't in the market.
It was oil, Google, and
Industrials,
Apple, and
right?
RIM. That was it.
Industrials. Big
Yeah,
industrials.
like I feel
And home
really
builders, to your
strongly
point,
that
too.
the best corollary to the Mag 7, like in the mid 2000s, was big natural gas oil companies, drillers.
Gold.
Yeah,
Well,
we were
yeah, 'cause
trading
oil went from 50 to 150, so the earnings were way behind. So
Yeah.
anything coal,
Nat
aluminum,
gas, $2 to
Coal,
$13.
Yep, coal.
Coal was hot.
What was
Yeah.
the coal stock? I remember the ETF. but-
Walter Industries.
Yeah, was
Oh,
it Patriot?
which
was
is
there
now
Patriot
Warrior
Coal?
Met.
WLI?
WLT.
Was that the only one?
No,
Walter.
And-
James
no.
River
Wasn't
Coal,
there Patriot,
JRCC.
River
Patriot
Coal,
Coal, and you know what else? Fertilizer stocks.
BTU.
Wilbur Ross had a giant coal
Yeah.
stock. He consolidated all these bankrupt coal mines.
Mosaic, Potash, all of those.
Agrium.
Anything that had to,
all those companies
anything
consolidated.
commodity related was benefiting from
Could
that.
you tell
huge-
him that, please, that Chesapeake was NVIDIA for like 3 years? It
Is
literally
he
was.
telling you that? That's not true.
Yes,
Thank
it is
you.
true.
Thank you, JC.
How is that not true?
No, anything commodity related was
What are you
was,
talking
was
about,
NVIDIA.
bro?
Did you know anyone that wasn't trading Chesapeake Energy?
We were trading Chesapeake Energy.
Like how many
I
times a
was.
day did we
I
trade
was.
And,
Chesapeake?
well, Aubrey McClendon and Tom Ward were trading it every day because they were filing every day. These motherfuckers coming in $1 million, $500,000
insider
together every day, form
Buying?
fours every day.
So why do
every
you
day.
disagree with my analogy? Wasn't that the most active talked about stock for like 3 years, like the way NVIDIA is now,
So
or
is
no?
Jared Wang gonna run into a bridge or something like that?
Jared Wang.
What's his name?
Holy shit, dude.
What's his name?
I have no idea what he's talking about.
The
Jensen.
CEO
Jensen.
of NVIDIA.
Jared. Why'd you make him the guy from Subway with the Jared? Yeah.
What's his name?
Jensen.
That's
Jensen
funnier
Wang.
than Archie the stockbroker. I'm sorry. Jared Wang is
Jared
good.
Wang.
That's gonna stick, dude.
Jared Wang?
There's your top in tech on a relative basis, by the way.
Yeah,
That's another coincidence.
I called that, but I called it in February, so I don't get credit for that.
You weren't wrong.
All
Go
I
to
said-
the next one.
I
quick.
said the best we're gonna get out of tech is happening right now for the year, and I still feel that way.
10-month lows on a relative basis yesterday.
Yeah,
but this is so healthy because the rest of the market is
I
picking
agree.
it up.
I don't
But
think
it
it's
was
negative.
a crowded trade.
So yeah, you think?
It was a crowded trade. I mean, how many people have messaged you about, hey, should I buy NVIDIA in the
Everyone.
past 2
Dude,
months?
everyone.
Everyone's talking about NVIDIA.
Yes, and you have stocks like AbbVie and Lilly that look as good as any of the tech giants, and nobody wants to talk about them.
Yeah.
Like except for people that are actually in them.
Although Lilly and Novo were getting a little crowded from retail, just because that's such an easy story to understand.
The banks were up huge in the first half of the year. I can't find anybody who wants to talk
A
about
week ago,
bank
Home
stocks.
Builders was
You do.
outperforming SMA. XHB was outperforming
Bank of
SMH
New York,
for the
Mellon.
year.
Holy shit.
What's the
you see
ticker?
that
Is that
base, bro?
BNY?
Woo.
But yeah, everyone wants
Oh,
to talk
wow.
about the ones that are going up. But yeah, beneath the surface, there's some other stuff doing.
I'm
well.
curious why you have this up. What do you think about this?
So
What's the
shout
tweet?
out Eric Balchunas. Have you had him on the show?
Yeah.
Yeah. He does great work with ETFs and
The best.
everything. Just one of his tweets that they filed a top 30 stocks ETF in the NASDAQ.
That's BlackRock. So what do you make of this?
Wait, what day was this? There's no date on
This
this.
this is recently.
This is
That's
like 2 days
recently.
ago.
What is this?
They're
Like,
they're doing this now?
This
Is the
just
top
dropped.
30 of
Does
the,
this look toppy to you? Is that why you put it up
is
here?
this the top 30 of the Qs?
Yeah.
Why does anyone need that?
Exactly.
They already have a FANG ETF.
There's a FANG ETF.
It's the same thing.
It's mags.
Why does
Max.
anyone need top 30 NASDAQ? What is
Nobody
that?
needs
That looked weird to me too.
It's like the OEX of the S&P
But
500.
these
It's
are the
like
things that
top
happen
100.
now, not 10 years ago.
But wait, why 30? It's like the tech Dow? Is that what this is going to be? Or the NASDAQ Dow?
It's going to be defunct soon, is what it's going to be. But
It's like
No.
It's
it's
BlackRock, this will be
90%. Why don't
fine.
you just trade 90% of the Qs? It's the same thing.
well, it's funny you said that. I actually did the math because I have too much time on my hands. It is 52% technology, and then if you add Google, Meta, Tesla, and Amazon, which are not tech stocks, and you add those to the tech exposure in this, you get 88%.
Yeah.
That's
So this is basically the portfolio that everybody already owns.
No, you know what it is? It's BlackRock.
Leverage.
No, it's
Leverage.
BlackRock
Perfect.
saying
So
it's
instead of-
BlackRock saying we don't have the Qs. This is their answer to the Qs.
instead of 100 Qs, buy 88 Qs.
That's
Same
it.
thing.
I
just
to be
saved you an
fair, to
ETF
be
by
fair with sentiment, they also did a other 70
Ah.
ETF.
Okay.
But the fact that this is even in the conversation reiterates the slide 5 that little long in the old
Is
tooth.
there a 10
But
times
we also
30
got it.
ETF?
But we also rebalancing that out is we just got an S&P 493 ETF that pulls out the Mag 7.
That's talk about the dumbest shit I've ever seen.
I don't know. I bet you it's having a decent
I
month.
want a 10 times
relative.
ETF.
I bet
That's
it's
what I
having a
want.
decent month relative to the Qs.
You know, there's a
Does
4X
that
now.
not make it stupid?
Yeah, I guess.
There's a 4X.
I'm not buying it.
4
I
times
know,
S&P
thanks.
ETF now.
Really?
Oh, so let's do this Japanese
Michael,
stuff.
coincidence?
Yes. Funny you should ask.
Michael is just not going to go along with you that there's market memory from
Dude,
1989.
it's come on.
I questioned it myself, and the market has spoken.
Dude,
it hasn't spoken.
Oh, no?
no way.
No.
A 20% correction. As
19
soon as it kissed those levels from 1989, it's just a coincidence.
Yes.
Dude,
You're
when
an
I got
idiot.
back to even, I sold I sold my Nikkei when I got back to even from
Yeah,
147
Joe finally
years
got
ago.
back to even.
I got back to even. I had a limit order in for 40 years.
In 1989, he walked out of the theater. He saw Tango and Cash.
Yeah.
He bought the Nikkei.
I had my Sony Walkman on, and I put in a limit order to sell. It just got filled. 40
Did you
years
have the
later.
yellow Sony Walkman on when you bought the Nikkei in '89?
And I had a Panasonic Discman, and I sold it all right there.
JC, this is stretching. This is stretching.
I thought so too, but it's not.
But what changed your mind?
Facts.
The great line, bro.
Who's
I
selling
questioned
there?
it myself.
Jared Wong, who bought in
It's
1989.
40 years.
Who's selling
It's
there?
40
Jared
years
Wong
ago.
is selling his Nvidia, I heard.
It's
Well,
fo-
he's-
it's
every
he actually
CEO.
is.
Every CEO.
It's a 40-year gap. There's nobody that's still
35.
long. Fine. There's nobody that's still long that was long.
no one's still alive.
No one's alive. It's like the end of The Irishman where they have to explain to De Niro. They're like, "You could tell us now. Everyone's dead. Your lawyer's dead. Like everyone is dead. You could tell us now. Like nobody who's managing money now was managing money then, and all of the shareholders have changed hands.
All right, let's keep it moving.
That's an interesting theory. And I'm not disagreeing with any of those things. But what we think and what's actually happening are two different things. And it is a fact that it took 35 years for this motherfucker to get back to those 1989 highs. And what happened when we got there? They sold them. For the record, when we got there in 1989, the real estate in one park in Tokyo was worth more than all the real estate in the entire state of California combined.
That's crazy.
We are now back to those levels.
The Bank of
35 years
Japan said,
later.
all right, we're in the clear. It's all-time highs. Now we can hike. We're good. They were waiting for the all-time highs to hit.
Okay, but you're not saying it's
It's not a bad
conspiracy.
thing. It's not a bad theory.
You're not saying it's conspiracy. You're just saying for some reason
No,
there's
he's
something
just
about that
saying.
level.
He's just saying.
They're saying there's resistance at
just-
38.
For the
Say.
record, it's 38,000 on the Nikkei. That's
Ish.
the level.
Yeah.
Yeah.
So we crashed in 1989 at 38,000, and the Japanese stock market just topped at 38,000 35 years later on Monday.
No, it topped
Friday?
months ago.
Okay.
They just don't talk about it because everyone's, talking about whatever.
Do you think?
Electric vehicles? What are they talking about these days?
So
don't
I
even
know there's psychology for people that weren't there that know the dates. Just like if you're writing a blog post or a tweet and you include 1987, you're doing that to evoke emotions in people
Yeah.
that weren't there at the time but it's like a jarring. It's like a callback to something that everyone knows was traumatic. We happen to have had a 1987 style crash in the Nikkei. What do you make of something like that?
For months, I would argue for years now, I have been looking at this chart because it's what I do, as you guys know. I've been looking at this chart and I'm like, I wonder. I'm like, we're definitely going back to those highs, right?
What
For
will
sure.
happen at those highs?
What's going to happen at those highs? And I was in your camp and Michael's camp. I'm like, no way. There's still market memory up there, bro. No way.
It's so symmetrical. It's so crazy how
There's a gap,
symmetrical this is.
It literally
1973, I
stopped
think,
going
before
up
that.
in the first quarter as soon as we got there. Like,
Okay. What do you do now? What do you do now with, not that you have to do anything, what do you do now with Japanese equities? How long do you have to give this to like let it settle? Or is that not how it works to you?
I mean, I've never traded the Nikkei in my life. I probably never will. We look at Japanese ADRs, look at the MUFG, right? Which is the Mitsubishi,
Yeah.
you know.
The MUFG.
The MUFG.
That's
MUFG.
like their biggest bank.
Uh-huh.
And it got annihilated.
Yeah, but whatever. There, Toyota, Honda. I mean, there are Japanese stocks. Like you don't have to trade the Nikkei. You know what I mean? Like, so I don't.
A very popular ETF in the United States with investors for portfolio construction purposes, DXJ,
Of course.
which is hedging out the yen, just pure Japanese stocks. That's Wisdom Tree.
Yep.
I think that's their biggest fund still. Do you look at something like that, or you
You
want to
know,
look at the individual?
I've come to the, and I think that you're gonna like this. This is something I learned from Todd Sohn, who I know you had here on the show
Yeah, shout out to
recently.
Todd.
Good for you, great guy. Todd's a man, and I like the way he
He's
thinks
a yellow
about
belt, bro.
it. Yellow belt,
Yeah.
like in karate.
Uh-huh.
Really? Huh. So his theory is you're not smart enough. You're probably not smart enough to time the price of the stock market. You're definitely not smart enough to get the currency right.
Yeah.
So what Todd likes to think about it is 50-50. Half DXJ, half EWJ. So if you want Japan, if you just split it into two, you're eliminating the currency risk and now you're just long the equities.
That's
I
interesting.
really like that.
So are any of these stocks popping up on your radar as opportunities, or they already recovered so much?
Nah, there's some Japanese industrials like at the index level that you could look at. I look at mostly, for the most part, international indexes as information to then apply to U.S. markets,
Yeah.
right? And understanding that what drives Japanese stocks and what drives European stocks, and kind of bring that back to the United States. There's some ADRs here and there, of course.
You trade ADRs? You don't. That's not a big thing for you.
Chinese.
Occasionally, yeah.
Yeah, Chinese.
You will trade foreign stocks that are listed here.
Yeah.
Like, you'll trade Mercado Libre.
Yeah,
By the way,
arm
the
holding, stuff
Best
like
stock
that.
I've ever seen.
Yeah.
Melly.
JC,
Monster,
the
yeah.
the S&P just had its best day since November 2022, according to Eddie Elfenbein. Is that something that happens in a bear market or a bull market?
the best day ever.
The best day since November 2022
The best day ever over the last 2 years.
for the S&P.
Yeah, you
Pretty
know, if you go back to like the last pages of the Stock Traders Almanac, Jeff Hirsch puts like the list of like the best days ever, best weeks ever, you know, in the NASDAQ and the Dow and the S&P.
Those happen in bear markets, we know.
They all happen in very high volatility
yeah.
markets.
Yeah.
Yeah, it's not
Usually,
necessarily
a great
that
thing.
volatility
Yeah.
comes in a bear market, not this time though.
Yeah.
So we
So
want
it's more specifically volatility.
So, Fahmy, you brought us a chart from
This could be-
1980. What is this? A follow through day. So we got a follow through day today.
I think it was. I have to look, but it could be a follow through day
Yeah, it's a follow through day.
because
we
when
get
you-
to put this on screen.
Okay, so when you talked about some of the things I saw that I lightened up, so the next obvious question would be, what would it get you to get back in? And the follow through day was invented by William O'Neill, founder of Investors Business Daily, where just the simple definition is when you're coming out of corrections, look for one of the major indices to be up. The definition has changed, but I just ballparked it 1.5% or more on higher volume than the previous day. And it usually occurs on day 4 to 7 of an attempted rally. So technically we came off the lows this past Monday. So I'd have to go look because I haven't looked at all the volume and everything, but it would be day 4 today. So this could be timely.
Follow through day confirms the fact that the worst is over.
It doesn't necessarily mean that we've bottomed, but we've never had a bottom in the market without one.
Oh, okay.
So-
So it's a
but basi-
prerequisite to a bottom.
Basically, he invented this because you always have that dead cat bounce, that snapback bounce.
Yeah.
But after the normal bounce from oversold, you want to see follow through. Since the big institutions control the markets, you want to see they can't hide their hand. So when they're coming back in with a lot of volume, you want to see it after the normal.
Does today
Bounce.
does today qualify on volume?
I'd have to see. I'd have to see.
Are you looking at indices or individual stocks?
Indices.
Okay.
Indices, not ETFs, indices. So this is just the basic, because I wanted to give a definition of a follow-through day. There's a few other
I'll
slides
take
here.
a look. Here's the I got your volume right here. That's SPY.
Not on
Not
the
on the-
SPY, on the
he's saying
actual full
The
index.
overall market.
The comp or the S&P.
Gotcha.
Yeah. So that's just the basic definition, is coming out of a correction, look for a big update.
Let me read these. Coming out of correction, look for the major index to close up 1.5% or more on higher volume than previous day. Occurs on day 4 to 7 of attempted rally.
Usually.
Ignore days 1 through 3 to let the rally prove itself.
Volume was higher yesterday on the red. But we had a really big intraday sell-off yesterday, so I'm not surprised that the volume was
No, but
higher.
this isn't it then.
Yeah.
We haven't had it yet.
But yeah, you ignore days 1 through 3 to let the rally prove itself. You want to hold day 1. So sometimes it can come on day 9, 10, 11. Usually in a real true bottom, it comes pretty quickly because the institutions are getting back in. That point about the day should give you a feeling of an explosive rally. Like
Today feels like
like the institutions, it's decisive, concludes, like they're coming back in.
Yeah.
I mean, is this good?
That looks good. That looks
Yeah,
good
but
to me.
to his point, we've also seen some of these in corrective markets, in higher volatility markets. They don't always work. So, this is to your point that you asked, which is a great question, Josh. Like, they don't always work because roughly half of them will fail, but no new bull market has ever started without a follow-through day.
John, let's do this chart from NASDAQ 2002. So walk us through what you're seeing in this.
So all of those bullet points, this is why you ignore the first few days, 1 to 3, to let it prove itself. Because if every little uptick in the market, I'm not saying we're good. This is a brutal bear market. This is like a 36-month bear market. But every little uptick, oh my God, we got to get back in. And then it fails. Every 2-3 days, and then it fails. I pointed out, every 1 or 2 day snapback was met with a failure until you saw the follow through in October of 2022.
I lived through this. I was 25 years old, and the distinguishing feature of that 01, 02 bear market was the relentlessness of it. We didn't have days with like massive sell-offs per se. It just never stopped going down.
Every rally failed.
And so I worked in 230 Park Avenue in the Helmsley building. And one fun thing about the Helmsley building, which nobody calls it anymore, the elevators they had a sky painted on the ceiling of the elevator. And they had 100 elevators in this building. You remember this, right? Like a blue sky with white clouds.
Nobody calls it the Helmsley Building?
No.
You guys
What do
did.
they call it?
Leona Helmsley died like 30 years ago. They call it
So-
230 Park. I don't know why. They just
What
do.
are they? What's the
For
crown
non-New
jewel of
Yorkers,
Park
this is the
Avenue?
building that's across from the MetLife building and Grand Central. It spans 45th Street to 46th Street, sits in the middle of Park Avenue. The cars have to go
You drive
under it.
under. Yeah.
What I remember
Ceilings.
about this bear market is every day you buy clients a stock, the stock would be down immediately. And then it would just go down 3 days, 4 days, 5 days. And I remember walking into the elevator. I'll never forget this actually. Looking up at the sky that was painted on the ceiling of the elevator. Like, why God? Like, why is this happening? Like, I can't fucking take it anymore. And that's exactly what your chart reminded me of. Seeing all those false upticks that were never the end of it. It just would not
and
stop.
I'm not saying that that's anything what we're going through now.
No.
I'm just showing the point of why you got to have a little bit of patience. Because again, if people are like, hey, for people who actively manage portfolios and you want to try to have exposure when things are good, you got to have a little patience, because at the end of the day, you need the wind at your back from the institutions. The big institutions control the markets, your hedge funds.
Who's they? So yeah, go.
Your
on.
hedge funds, pension funds,
Mutual funds.
mutual funds. I mean, Fidelity, T. Rowe Price, the big, CalPERS. Like, if you're buying 1,000 shares, 10,000 shares, it doesn't mean anything. It's when they're coming in with 100,000 and 2 million shares. They can't hide their hand, so to speak, and they're not getting into the market in one day. They're doing it over a few weeks and for longer term. So you need the wind at your back from the institutions since they control the market. So this was just to show you the point about, you got to let it prove
Be
itself.
patient.
Be patient.
Put up October 1998, please, John.
This is a perfect example.
Here's a
So you had
follow-through day.
long-term capital, and then when the Fed came out and rescued long-term capital, Russian debt crisis, and I pulled up 98 for Batnick because he wanted something recent. So I did that on purpose. But basically, we come off the lows, and you look for days 4 through 7. You have that snapback rally off of the lows, off the October 8th low, And I don't even remember what I had for dinner last night, but I remember like every random date in the markets. And then you come off the lows, see how it didn't fail? It held. And then now you have a bigger volume day, big, huge up day. The institutions are coming back in, higher volume than the previous day and above average volume. That's at least a sign.
We'll do one more of these, March of 09.
Yeah. These are just really quick, just tips. Look for a follow-through day. If you get through the 50-day, that's great. If you get a second follow-through day, that means the institutions came back in, and to the point of it takes time to buy stocks. A couple days go by, they come back in again.
Where do you usually buy stocks in the trading day? Do you always buy at the close or not necessarily?
No, at any time. Yeah, I try to avoid the first half hour, the amateur hour, let the ranges settle.
And it's funny you said that because I know people who only focus on the first half an hour.
Right.
So there's
Or the last
there's
half an hour.
Or they buy in the
I've never heard
close.
that before. That's interesting.
what?
That the people are most active at the open.
Well, the day traders.
The day traders are,
Yeah,
but
they're done by
I
10:30,
actually would
dude.
rather wait for a European close because about 10:30 to 11 is when a range forms. A lot of times, depending on which, in the European market closes, but with the time difference, but you usually get a low or a level to trade off of.
If you're
around that
trading
time.
VWAP, you need enough time to go by for there to be
Yeah.
a VWAP.
Well, you use the prior day.
But some people wait for the afternoon or wait for the close. So
VWAP never
So
sleeps.
this is an example, March of 09. And the reason I bring this up is that the recency bias of the 18-month bear market from October of 07 to March of 09, it's the end of the world, it's financial crisis, and the recency bias is we're all going to die and it's the end of the world. But you had 2 follow-through days off of the lows, and if you just shut out the noise and shut out everything that was going on, I mean, Obama told you to buy stocks around this time. I mean, if there's anything, presidents usually don't do that. But the point is that you had the institutions coming back in, and this shuts out the noise and the biases and financial crisis. I think there was like TARP and TALF and all these different, government programs that basically put a Band-Aid on the market, and the institutions are like, okay, it's safe to get back in. And this keeps you out of trouble. So you don't, because you know how many people kept shorting this because they thought we were going much, much lower. Yeah. So this keeps you out of trouble too.
We wanted to finish with just some tips for traders during market corrections.
Finish. I thought we were just getting started.
Even though this one may or may not have run, what?
He has
more?
He has 400 more charts to go.
All right, let's do your last 400 charts,
but
and then Go ahead.
We'll come back to this because this is
Okay.
important what Josh is saying.
Okay.
Well, I know you guys are a big fan of the Little Aristocrats, so I wanted to bring one.
I do love
I
this.
love them.
I know.
All
I
right.
know.
What do we got?
Slide number 29 there.
What in the
What is
world?
this? You're
This
just
is-
making stocks up at this point.
This is Cactus Inc.
This is not a real company.
Look at the little young aristocrats with the
How
mustache.
dope is that?
Yeah.
I thought you'd like that.
Yeah, that's
I'm not creative enough to do that.
Wait, so let's back up. For people that aren't familiar with your work, so at All Star Charts, you have a product called Young Aristocrats where you're looking for stocks that fit certain characteristics as longer term investments potentially.
Yeah,
not
if you want to go to
trades.
the next one, I'll just show you and then we'll come back to this. But
Okay.
Are these
these are stocks.
To grow in market cap.
These are stocks that, right? So the way to make money in dividend stocks is not to buy stocks that pay high dividends. It's actually a great way to lose money in
Yes.
dividend stocks, as it turns out.
Growing dividends.
You want to buy the stocks that they keep raising their dividends every year.
So a dividend aristocrat, by definition, is a company that has been paying a dividend steadily for a certain number of years.
It's like a, lot.
dividend
25
aristoc-
years.
It's like a lot.
A dividend aristocrat has increased
Right.
their
Okay.
dividend every year for at
Every year
least
for at least
25
25
years.
Yes,
Okay,
you have to
got
wait
it.
forever. So these are before.
So you're
Exactly.
trying to get them earlier in the dividend aristocrat process.
That's right.
Which I love that.
Love
So
it.
these are the future aristocrats or the young aristocrats.
Why isn't this an ETF yet? What are you afraid of?
I feel like Wisdom Tree should do this.
Because they're too busy coming up with ETFs for the top
No,
30 NASDAQ.
honestly, like, why wouldn't you just go to a couple of ETF issuers and pitch them this? They would do it in 2 seconds.
Because the ETF
They're doing the
business,
dumbest shit ever.
the ETF business is a really shitty business.
No, but you don't have to run
Have
it.
you seen the margins
No,
in these
you're-
ETFs?
You're licensing your IP. You're not running the fucking ETF. That's somebody else's problem.
Yeah.
You're licensing your IP. We'll talk at dinner. Okay.
I like high margin businesses, and this ain't one.
How
of them.
about businesses where you don't do anything?
How about
you like those too?
ETFs are like running a
What about
restaurant,
what
Josh.
about getting a check
like
in the
it's a pain in
mailbox?
the ass.
How about
No.
businesses that like literally you do nothing?
Licenses?
'Cause that's pretty good too,
a great
right?
idea.
We'll talk
You
about
go
I
dinner.
need
You
now.
go to
I
your
need to be on the
mailbox.
cap table for this.
We'll go
okay.
at dinner.
I want 10%.
So I like stocks that have increased their dividends every year for 5 to 9 consecutive years. Right?
Okay.
Is it perfect? Probably not. But
How
it's
big
pretty
is
good.
that? How big is that universe? U.S. stocks.
It's a good question. Right now,
Like 3,000?
no,
2,000?
5 to 9 years. No, it's a few hundred names. It's a
Okay.
few hundred names.
All right.
There's one stock that's raised their dividends for 100 straight years.
Really?
Yeah, it's like the Century Club, some crazy shit.
Okay.
Nevertheless, 5 to 9 consecutive years. Because if you raise your dividend every year for 5 straight years, like
You're
I'm
probably
no
very good-
fundamental
Probably a
expert.
very good company.
You're probably doing
Business is-
something right.
Business is good.
Yeah.
Like you got to be doing something right. So 5 to 9 years, then we sort by relative strength, Joe Fahmy.
Yeah.
So now you're looking at companies where fundamentally something's going right, even if you know nothing about fundamental analysis, and
the
the
chart's
stock's
good.
going up.
Yeah.
And they keep raising their dividends. So Cactus is a good example. Oil and gas stock from Houston, $4 billion.
That's not nothing. That's not. I mean, it's Russell 2000, but it's not nothing.
Well, it's a mid cap now.
It's a mid cap.
So you're going to find a lot of Eddie Elfenbein's type names on these lists.
Right.
You know, random like, you know.
What do they do?
yeah.
They design wellheads.
What's the
Random.
cutoff for small and mid cap? Is it $2 billion now?
It depends who you ask, but 300 million to 2 billion is kind of the rule of thumb. I think that's bullshit. So we just dropped a new report. So if you go to slide 31, so you go to getthecharts.com. Anybody out there
new
listening?
New URL, getthecharts.com.
Getthecharts.com, and we'll
nice.
send you the Young Aristocrats report for free
Okay. And how often are you updating?
once a month.
So every month you'll look at the existing. So this is definitely an ETF. What are you doing?
Yeah.
This is $1 billion ETF.
Mailbox money.
Shitty business.
No, you're not in the business. Someone else is in the business.
Batnick will do
I
the
also
trades for
didn't
you.
own my company until recently, so I had some restrictions.
All right.
I got
No,
shit
now
going
it's on.
on.
But you are the IP owner. You license the IP. Someone else does the shitty business, but we won't tell them that.
The guy who invented this died, and it's like some young kid who does it. Like the Dividend Aristocrats, it's like
Yeah.
some kid.
Really?
The guy passed away.
Right. So,
So the kid just picked it
And
up.
JC, you could get 2 basis points for this business.
Oh,
I mean, but also have nothing to. All right, it doesn't matter. Tips for traders during market corrections. We have a lot of listeners who have been through a million corrections. We also have a lot of listeners who are learning to invest and trade for the first time. And we have people that have been through a lot of corrections but haven't learned anything because they're not really thinking that deeply about what's happening to them. So I thought this would be a really nice place to end and just give people some ideas that are in your heads while you're watching an 8% drawdown in the S&P 500 materialize relatively quickly. So we didn't get all the way down to 10% yet. But like, what are you thinking when these things are happening?
Higher volatility, smaller position size, I think is important.
I like that.
Because you gotta, I love Druckenmiller, and I've been inspired by so many interviews I've seen of him recently. Like he calls it the fat pitch. He knows when to. He has this incredible ability to identify when that fat pitch is there to step on the gas, and then when it's not there, the second thing is to have the discipline to hold back. To basically say, okay, I'm trading 100 shares, I'm going to go back to 10 shares. Or I'm trading 10 contracts and I'm going to go to 1 or 2, just using round numbers.
Because you still like
feel
this,
the
you
market.
still like the setup, but the environment is not
he
rewarding.
says, he admits, he said in an interview, I'm a junkie, just like everyone else. And I'm like, one of us.
Yeah.
One of, like
But
he
also,
said.
you can't get a feel for the market if you're not
Right.
if you don't have money at risk.
Yeah, you still have to dip your toes
Right.
in the water, so to speak. So he's like, I still have this junkie side of me, but to have the discipline to not always, if you're always buying 100 shares, to pull back to 10 during the times when it's higher volatility. And if you're a trader, you're going to get chopped all over the place with 2-3% daily moves.
Yeah.
The first thing you got to do is cut down your position
But
size.
he will also step on the gas. Let's say he puts on a 10-share position. It's Druckenmiller.
I know.
So
We're used to
10,000 share
Yeah.
position where he normally would buy 100,000 shares. And then the stock starts to run and he's right. Or the
Yeah.
commodity or whatever he's
Whatever
trading.
he's doing, yeah.
So then he's like, well, I'm not big enough. He can always add to that position on the way up. It might not be as satisfying as having your whole position on lower, but it's like good enough.
But when it's moving in your direction, at least you're trading from a position of strength. You're trading from a position of
Confidence.
like clarity, confidence, everything, rather than buying the stock at 50 and then 3
Well,
days later it's
you-
at 40.
It's
And you're
confirming that you were right to begin with.
You
Yes.
talk about your mental capital a lot. I think
Yeah.
this is a really great example of preserving your mental capital.
Absolutely, because, all right, we have a correction now. I think it's a correction in a bigger bull market. Bull market started last year. They last 3 to 4 years. And along the way, you're going to have corrections. But if you get killed during these times, when it turns and you have these amazing trends, you want to be confident when you're trading. You don't want to get beat up, because if you just get beat up and you're trading size and you're revenge trading, when the skies become clearer when you go to the elevator and the blue sky's actually nice.
Dude, I can't go back to that building ever again. I had an appointment in there and I like a meeting and I canceled it
traumatized.
years later. Yeah, I just I don't feel like going there.
Traumatic.
Yeah.
JC, what would you say? Tips for traders in volatility?
So I'm glad Fahmy's here because this is a very Joe Fahmyism. Market shit in the bed, everything's red, and look at the ones that are green.
Ooh, I did that today.
Relative strength.
Yes.
Look at the stocks
Look at the ones that
near
are
new
bucking
highs.
the trend. On Monday, we had Cinemark. This trades up like 400% in a week for us. It was making new 52-week highs on Monday. Rocket Mortgage was making new 52-week highs on Monday. Like Rocket Mortgage,
I own
movie theater.
I own
Like
two
these-
stocks
it's not like
that
a
are
consumer staple.
that are doing that, and those are the ones that I'm asking myself: do I not own? I own Nasdaq, NDAQ.
That's- and CBOE's
It's at a
doing new highs,
52-week
yeah.
high, and it's hanging in there. I probably don't own enough. I don't know what the
I
other.
own,
I don't know what the other
Intuitive
one is.
Surgical, full disclosure, and it's near a 52-week high.
Yeah.
Barely got budged the last week.
So look for the
Okay.
relative strength.
Yeah.
Also take the VIX and divide by 6.
Wait, can we back up really quickly? Because the instinct of most people who have not been educated about trading, the instinct is where are the stocks down the most? Because that's going to be the biggest snapback. And
Never.
I've fallen victim to that. It can work. It doesn't normally work that way.
The whole point is if the market's getting killed and the big institutions are not budging, it's because they've done the work and they believe in it longer term. And if they're not selling those shares and they're dumping other stuff, as soon as a little tension gets relieved off the market,
What they're doing is they're selling all that other shit that you're talking about, the ones getting killed the most, to buy these.
Yes.
That's why they're
Or
greedy.
the amateur would be like, this thing's down 25%. I'm buying it. You're like, this thing's down
It's-
0.5%.
it's
Why?
all probabilities. It's
Yeah.
a higher probability once tension's relieved off the market. Some people use the analogy beach ball underwater.
Yeah.
Once it's just the tension's relieved, those have higher probabilities of going
Okay,
higher.
what's the second thing that you're going to say?
You divide the VIX by 6?
Divide the VIX by 16.
Oh.
And that is what the market is pricing in for a given day. So in other words, if it's a 32 VIX, you're looking at a 2% move on the S&P 500 on a given day. Is it perfect? No, but it's pretty damn good.
What do you do with that information?
Well, position sizing,
size.
what exactly Fahmy was saying,
Okay.
like you could trade smaller because you're going to get the same move at a faster rate than you would in a boring market where you need larger position sizing to make the same
Especially if
transaction.
you're trading. You don't want to get chopped
So
up.
you trade
You don't wanna
smaller.
get chopped up.
Do you look for less beta in stocks during a corrective market and maybe look for more defensive stocks that are moving less or not
I
necessarily?
still like to stick with growth stocks longer term
No matter what.
because
Okay.
you get your bigger bang for your. I'm not looking to rotate into utilities and this and then.
Well, a lot of people
financials.
will do that.
Some people do, and if you can, it's not what I'm not trying to chase what's the new high list. I'm just trying to stick with growthier areas, whether it's medical products and tech and stuff that have good growth.
And when they're
rates.
working, you'll long the shit out of them. And when they're not, you'll sit on your hands.
You know my biggest tip for trading and correction?
Limit orders.
Limit orders. I look for like the best stocks and I come up with
I
ridiculous
thought you were gonna
prices
say drink heavily.
that they should never trade at. And I just put those in GTC and I start rooting for the market to keep falling. It's weird, but it works.
Yeah.
It works for me. It's a psychological trick. So the rest of my portfolio is getting killed, but oh my God, I'm about to get executed on Netflix at $4.99. It was just
Yeah.
$700. I do that shit all the time. I didn't do it this time because I didn't have time, but that's psychologically been like
It
one of
wasn't
my.
much of a
The
correction.
big
It was fast.
institutions,
No, it was
right?
too
The
fast.
big
It was
fast.
institutions
It was
will
too
write
fast.
puts because that's an area that they're willing to buy. And if they don't get executed, especially in a higher VIX, they'll just collect a great premium.
You know what my
Yes.
other rule is? ABC. Always be cool. Yeah. We like this?
People were very upset with me on Monday because I was
Well,
very
'cause
nonchalant.
You're kind of a dick. Not for
I
nothing.
wasn't being a dick.
Well,
I
you're
just
like,
wasn't
what's the big
overwhelmed.
deal?
I have you
and
muted, so I
panicking.
have no idea what
Yeah.
you're saying.
Fahmy muted you. Michael, do you still have him on
Fahmy
mute?
literally doesn't return our phone calls. Straz has been trying to get him on the phone for like a month.
All right,
Fair. Two out of the three of us have you muted on Twitter.
Oh.
So
why
people
were
are
they?
mad
Why
at-
were they upset to finish?
There's a
your
lot
thought?
more behind that.
No,
just
I
not
know.
just
Why
the two
were
of
they
you.
upset? By the way,
Because I wasn't panicking. Because I couldn't find a reason to panic.
that's
It
brilliant.
was actually surprising.
I appreciate that. I might unmute you now because I appreciate that.
Guys,
Can I go back to Druckenmiller really quick?
Please.
I want to make this point that I've seen so many interviews because I believe that expression success leaves clues. And I mean, the fact that he had 30 positive years, I believe there's one word that defines excellence, which is consistency. Michael Jordan's not considered one of the best players ever because he scored 30 points once in a game. It's because he consistently averaged 30 points per game over a 20-year career. You know, consistency is amazing. I give props to Mike for your podcast, over 370 something episodes. That's
that's
consistent. That's consistency is the key. And Druckenmiller going to finance, 30 positive years, not a down year with an average of 30% returns. Like it's unheard of. It's
And-
unheard
He
of.
only had 2 down quarters, I think.
It's insane.
And in the spotlight the entire time, like under everyone's microscope. Yeah, it's pretty incredible.
And so that consistency, and one of the favorite quotes I have, he says one of his greatest assets over the past 30 years is his ability to change his mind. So he's not stubborn. He's not one of these guys coming on TV to your point, every day for the last 10 years, bear market, bear market, bear market.
Yeah.
He's flexible. And all the greats are flexible. Paul Tudor Jones,
You know
flexible.
what's funny? I've seen him at his most bearish, like sitting at Irisone at Lincoln Center in 2010. It's just, he's literally prophesying like apocalypse. But I've also seen him at his most bullish, where he'll come on TV and he's just like, you got to buy him.
Yeah.
And I've seen both versions of him.
Have
So
to be
he is flexible.
All the greats are flexible. Tepper, I can't think of a greater flexibility than being heavily short financials in 08, 09. And when we showed that bottom, and then the government changes things or whatever, TARP, TELF, whatever was going on at the time, not only did he cover his shorts, he went aggressively long financials. I can't think of a more flexible, like that's what all the greats do.
And let me just put a cap on that by saying, and if you can't do that, you really should not be trading as though you can. Like that should not be your investment strategy.
That was
if you can't do that.
Tepper's greatest trade ever, in my view. You know what his worst trade ever was? Trading Christian McCaffrey. I think that was the
or
worst
just
trade.
how about buying the Carolina Panthers?
Well, I don't mind that.
Actually,
you have to be flexible is my point.
No, as we wrap up, the trade they did with the Bears, I mean, he gave them Caleb Williams.
Yeah.
Yes?
Yeah. With the number one
and
pick,
DJ
yeah.
Moore. Horrendous.
Do you think he liked it on the off-season Hard Knocks?
No, I don't think he liked that.
Watching the Giants flease his
that was embarrassing.
his team, that was pretty bad.
That was tough.
So, Joe Fahmy, ladies and gentlemen, give it up.
Thanks for having
JC
me.
Parets.
The best. The absolute best here.
All right, you guys are awesome, and I know the listeners and the viewers appreciate every time you guys are on the show. So thank you guys so much for coming.
Well, thanks for having us.
Absolutely, we're gonna have some fun tonight. We're going to dinner, going to a new spot, Albert's Bar, which is like on 41st Street. You and I used to go to happy hour in this place when it was called something else. It's like changed ownership.
41st and what?
41st and Lex, right outside of Grand Central,
Something
east
Irish,
of Grand
probably.
Central.
O'Connor's.
Like that one time that thing blew up over on 41st and Lex, remember?
Yes, maybe. I don't know. We did a lot of
This was
drinking.
like 2006 or 7, and like so 9/11 wasn't too far off. And Josh is like, "Holy shit, we gotta go!" Remember we started running uptown.
I ran all the way to the Upper East Side. I ran
Remember?
home. Yeah, a manhole cover blew
It was
off.
a manhole cover.
But
We were right in front of it.
I wasn't waiting. You know me. You know what's funny?
We saw a rain cloud on the jet skis.
More than a rain cloud. We were in the water. It was raining 2 days ago. I saw a lightning strike.
He just takes
I did
off.
70 miles an hour out of
Yeah,
Zach's
just
Bay.
takes off.
They're all sitting on the boat. Like, I don't think he's coming back. Favorites. Anything for the viewers, the listeners that they should hear about? Anyone got anything good?
Hard Knocks. Hard Knocks is back. We did the Giants, now it's the Bears training camp. Love it.
Okay.
It's fun.
All right. Very good. You got a favorite?
I gotta tell you, I brought my family into the city for the first time ever.
Okay.
The whole family.
Yeah.
We brought my daughter to see the Rockettes back in December. Took her to Del Frisco, so we did that.
You brought the boys too now.
Brought the boys to.
How old are they now?
They're 1.
Okay.
Almost- they
they'll
turned 2
remember
in
this, They'll
October.
remember this forever. They'll
I
they'll
figured-
treasure these memories.
But hold on, but this is good for people to hear with young kids because we started at, this isn't something I do a lot, it's the first time we ever do it. We started at the Museum of Natural History to see
Great.
dinosaurs.
Best.
They love dinosaurs and bears
Kids
and
love
lions
Kids
and
love
tigers and all
dinosaurs.
that.
Kids do love
So we
dinosaurs.
started there, then we walked to the city, went through Strawberry Fields, smells a little funny in that part of the park, right? All that. And then we went to the boathouse, had a nice little lunch, went to the little lake there, played with the turtles, right? Feeding the turtles, little turtles swimming up, went to the Central Park Zoo,
Yeah.
right?
It's a big day.
You should
went
do
to-
tours. You got an ETF idea and a New York City tours
So
idea.
no, but you know what? I remember doing all those things with my kids, and it doesn't matter if they remember them. The point is that we did them.
It was awesome.
Yeah.
That's
we
awesome.
all had a good time. The kids were well behaved. We went to playgrounds,
You have the
multiple
double, You have
playgrounds.
the double stroller and the girl is walking?
Triple
Or
stroller.
Triple stroller. Shout to that.
Shout out to the Zoe. That's the name of the stroller.
That's the stroller.
So that's like the dope stroller.
So we had in my day, it was the Bugaboo.
The Bugaboo.
Remember my stroller I
That
used
still
to have?
exists. That still
Shari
exists.
would like wheel it into the office.
No.
Yeah, it's still a thing, right? All right, shout out to that. Joe, any favorites?
I got nothing.
You got nothing?
Nothing.
What's going on in Vegas right now? What do we need to know?
I don't know.
Where should I go? Where should I go for
I find
dinner?
it hard to believe that you don't know what's happening in Las Vegas.
Yeah, Vegas Joe.
I'm trying to think. I don't know. Same old spots.
Where should we go for dinner when I come in October? Should we go back
Magicians,
to SW?
musicians.
Oh yeah, I got some new magician friends, so we got some.
All right, shout to that.
You know who I did meet.
Joe is very influential in the magic community.
I met David Copperfield, and he had a 3-hour sit down with a bunch of my magician friends, and I was invited. Absolutely epic.
He trades
really?
meme coins.
I had
David
no
Copperfield.
idea he was a billionaire, by the way.
What?
David
Copperfield's
Copperfield
a billionaire.
How old is he now?
68, I think, something like that.
shit.
67.
That's wild.
And
What?
he was unbelievable, just held court. And I
Wait,
was
is it from investments? It can't be just from magic.
yeah, because when he did all those things, when he made the Statue of Liberty disappear and the Learjet and all that stuff years ago, he said people say it was a 747, but he's going with the myth because it was a Learjet apparently. But anyway, he invested a lot of those in land and investments. Yeah.
Is he still doing those big epic stunts?
Still does his shows. They don't do TV specials anymore, but
I love magic.
David Blaine kind of ran those into the ground. He's like, I'm gonna freeze myself, and everyone was like, all right.
Yeah. But
I feel like those have kind of lost their
I just
appeal.
love learning and listening from fascinating people and stories because I just love a great story, just everything. Learning from people who are just a great experience.
That's
and all
why we're
that
such
stuff.
good friends.
Yeah.
Yeah.
That's
Is it bullish that we didn't talk about crypto once?
Yeah. Did you have any in the deck? Well-
Solana made new all-time highs relative to ETH.
Today.
Charlie Dow said you want to keep an eye on that Solana ETH correlation.
Yeah.
All right, we're
He
gonna wrap.
would have.
We're gonna wrap. We have dinner. We have things to do. Guys, thank you so much for listening, for watching. Please make sure to leave us ratings and reviews. I want you all to follow my friends JC and Joe Fahmy. Joe, what is your Twitter handle? You're at J Fahmy?
At J Fahmy, first initial, last name, yeah.
All right, and you are at All Star Charts. Okay, unmute JC. He's changed.
I'm going to unmute him.
He's going to be less of a dick the next time the market's down. This isn't our problem.
I will be not less of a dick.
It could go to 0.
All right, great job
Fake
this
news.
week. All right, guys, we're doing
Shout
the
out
credits.
to your amazing crew.
The crew is ridiculous. What an unbelievable job,
Did
John,
Nicole just leave?
Sean, Duncan, Nicole, Daniel, Graham, Rob Passarella, ladies and gentlemen. Just
Some of the
an
best. Some of the best.
Some of the best.
Thank you, guys. Thank you.
Matt, Chart Kid Matt, just an amazing crew. All right, guys, that's it from us this week. Thanks for listening. We'll see you soon.